Recently, Tesla declared that a stock split might be forthcoming. The manufacturer of electric vehicles garnered media attention after stating that it will later this year seek permission for a stock split. Is it time to buy something? Despite the fact that the proposed split is still in its early stages and that there is little information available about it, Tesla's stock price has increased since the announcement in late March. Whether the upcoming stock split will result in outcomes that are comparable to those of the previous stock split back in 2020 is practically difficult to predict, according to experts. When is the ideal moment to buy Tesla stock? Should you invest before or after the split if you're on the fence about it? Watch this space to learn whether Tesla decides to do a 2-for-1 stock split, which lowers the price when a firm splits its shares into smaller prices. Tesla stock is now trading for roughly $1,000 per share. For instance, there will be twice as many shares available at a price of $500 a share. According to experts, stock splits don't significantly alter the stock. The company's market value stays unaffected. The split will result in extra shares for those who already own the stock, but the overall value will stay the same. However, they might entice investors on a restricted budget to invest in pricey equities. What difference does the time make in terms of the stock's actual value if you have to pay $1,000 for a single piece of stock? However, if the price drops to $200 per share following a stock split, it may be more affordable to the average investor. It doesn't really matter if you buy it now or wait until after the split. Investing at a cheaper price doesn't always mean you're getting a better deal. You merely control a smaller share of the company because stock splits have no impact on the company's valuation. A stock split is essentially a technique for dividing existing shares into more manageable halves. As a result, the stock price drops while the total number of outstanding shares rises. Taking slices off of a newly baked pizza is an analogy for this. While cutting the pizza into pieces doesn't change anything, it does make it easier to share and consume. Splitting Tesla would increase its accessibility to investors and broaden its market and reach. What does this mean for shareholders who wish to purchase the stock prior to the split? If the stock price increases as a result of the split, like it did in 2020, you will benefit from investing now. Periodically, stock splits can reignite investor interest in a company. If this occurs, making an investment now before the split might yield huge benefits. Anyone can speculate as to whether Tesla's price will increase as a result of the separation, though, given that the economy has altered since the previous stock split in 2020. No one is certain when this potential stock split will occur. It is therefore challenging to forecast how the split will impact Tesla's stock price. The company will require shareholder permission before it can issue share dividends to enable the split, even though there isn't anticipated to be much opposition to the plan. Only a few days had passed since Google and Amazon both announced stock splits. On June 3 and July 1, respectively, Amazon and Google will split their shares 20-1. Even though we don't know what Tesla's split ratio will be or when it will happen, GameStop is now doing the same. If history is any indication, it may occur shortly. In reality, a stock splitting for the second time in 2 years is quite uncommon. The most comparable examples might include Microsoft's series of minor splits in the 1990s and Amazon's 3 splits in 1998 and 1999, but those series had lower split percentages than Tesla's previous split. Like many investors, you might be curious as to why Tesla is dividing its stock. Well, there are many different strategic justifications for implementing a stock split. A corporation typically expects strong growth and wants to keep shares at a fair price for common investors. Additionally, Tesla employees and others who get stock-based compensation will find it simpler to obtain the shares. There may be further strategic illustrations. Because stock price directly affects index weighting, the Dow Jones Industrial Average, or Dow, is a well-known price-weighted stock index. It is a component that is considered for the Dow. High share prices may indicate that a company is not generally one to invest in. According to Reuters, there appears to be a pattern. However, there may be an indirect relationship with the company's growth and other factors playing a part in part, or entirely splitting the stock indicates that the company is growing and confident. On the other hand, those who trade stocks and options frequently take advantage of the split atmosphere for their own purposes. Research from Bank of America shows that companies that split their stock to around 16% better than other companies in the 12 months following the split. Compared to the previous stock split, when the board only announced its decision on August 11, 2020, and the stock was rapidly split on August 31, 2020. This stock split will need Tesla and its shareholders to go through a few more steps. After the final split and public offering in December 2020, the Securities and Exchange Commission, or SEC, imposes a limit on the number of shares that can be in circulation for public companies. According to current regulations, Tesla can only do a 2-to-1 stock split without shareholder permission as it approaches its limit. The board of directors will then vote to approve a stock split, which will almost definitely be publicized shortly after. This suggests that Tesla will first announce a greater multiplier. In order to complete the split, the investors will also get a share dividend for each share you own. As of the cutoff date, you will receive 4 more shares on the day of the split if the split is again 5-to-1. So how do stock splits affect option prices? Options are impacted in the same way as shares if they expire after the split day. If a 5-to-1 split is announced when you have a $1,000 strike call, you will instead receive 5 $200 strike calls. Though Tesla's recent stock split intentions are generating a lot of excitement among investors, this situation gives you additional options when determining whether to exercise or sell. As we previously mentioned, it is preferable for investors to concentrate on the core business. According to Charlene Reinhardt, CPA, the change is merely a cosmetic one that won't make your account fatter. She advised that if you want a chance of long-term success, pay attention to measures like revenue, potential production capacity, growth in car deliveries, and so on. The Motley Fool advises including Tesla in your portfolio only if you think the company's core business can continue its recent record of strong success after researching the company's finances and goals. Expert opinion suggests it's even more enticing than a stock split announcement if Tesla continues to wow investors because it may give you the portfolio gains you've been looking for. To sum up, Tesla will simply divide the same ownership pie into many smaller portions. The sum will not change, and each of your current Tesla shares will continue to have the same value. Let's go back to the summer of 2020 when the company announced its first and only split, which resulted in a spike in stock prices from the time of the announcement until the final 5-for-1 split at the end of August. The separation had made little difference, investors realized, and some of Tesla's inflated market value started to trickle back out. Tesla was dominating the market before the 2020 split, and after that small chart squiggle, it soon resumed its outstanding performance. The market frequently functions as a popularity contest in the short term, but it is an efficient weighting machine over the long term. Because of this, the stock has grown by more than 1,800% over the past 5 years. In the grand scheme of things, the stock split from 2 years ago was really a footnote. You should be concerned about vehicle deliveries, revenue growth, and free cash flow as a Tesla shareholder. Considering that the majority of stockbrokers now allow us to purchase fractions of shares in expensive tickers like Tesla, the specifics of how many shares you can purchase for $1,100 are less significant. The company's financial statements are all about money after all. With or without the impending stock split, Tesla is a fantastic investment right now in that regard. Do you agree with Tesla's plan to split its stock? Post a comment below.